Welcome to My Money Mindset podcast, where we explore how a healthy mindset is the foundation for financial success. Each week, we delve into mindset hacks and practical strategies to help you enhance your income, help you make more appropriate investments for yourself, and to improve your overall financial well-being. Join us on this journey to transform your financial future by transforming your mindset. Please note that the information provided on this podcast is for general information purposes only and does not constitute as personal, financial or health advice. It has been prepared without considering your individual objectives, financial situation or life needs. Before making any financial or health decisions, you should consult with a qualified professional or financial advisor to ensure the information aligns with your specific circumstances. So let's begin and enjoy this journey as each episode teaches us on how to improve our overall mindset that overall improves our financial success. Welcome to another episode of Money Mindset. Today's episode I want to talk about how to make money fast. So a lot of my inquiries are often, I want to make money fast, I want to recoup any losses that I've done in the past, or some mistakes, whatever it might have been. And realistically, how can I sort of escalate and make money fast? Now, the interpretation of fast can be, with different people, mean different things, right? So if fast to me would be, well, you know, how much do you want to make and by what time frame? And if it's something that you believe is somewhat ridiculously or out of reach or something that's quite impossible, then or next to impossible, it can create anxieties. And those of you who know me know that that's nothing's worth it. No money, no your health, sacrificing anxiety and escalating anxiety simply just to make money fast and to recoup. I'd be questioning why you want to make it so fast. What are your strategies behind it? And what can we do to make it more efficiently, as in making money more efficiently? If it's something that is affecting you with your job and that you don't going into work and you want to change your job or your career or what you do during the day, you have to have a look at that and then do other things like as in improve career moves, stuff like that. But this episode's about making money fast and investing it wisely. So it's a two-pronged sort of approach, right? So the moment you make money, what do you do with it? Do you invest in it? And therefore, when you sort of invest in it, you're also making money at the same time. That will sort of generate more income. So as you're making the money, you're investing it, the investment's also giving you a return. And there's various means that we can sort of strategically have a look at, and how are we going to invest and so on and so forth. So I'm going to touch on a few different points. It may be sort of a long-winded episode. I hope it isn't. I'll try to be as quick as possible, but I have added some notes. And it's important to understand that the fast money often comes with higher risk. So those of you who know anything about investment, the higher the return, the higher the risk most often it interprets. Fast money, and that also is with making money, so higher end paying jobs or whatever. There's also a lot of risk and compliance there as well. But, you know, there's always exceptions, right? And requires a significant amount of effort to make a lot of money faster. So some of the avenues I've put is leveraging on your existing skills for freelancing. So if you've got a job and you sort of want to put a second job, if you've got skills like writing or graphic design or whatever it may be, social media management, virtual assistants, you can offer your services on freelance platforms, stuff like that, as in when you get home and you need another job or something. If you've got time to do that, it's always good. There's also local services, so in your neighbourhood. So there is obviously reaching out on the net, as I gave the example, but there's also in your neighbourhood. What's in your neighbourhood? Is it a lawn mowing business or dog walking business or child minding business, that sort of thing? What your immediate or local services would demand, and that's just making money on the side, right? It could be pet sitting, like I said, gardening, handyman skills. It could be your car washing. All these type of quirky little things that you sort of tend to disregard these days. Are quite popular back in the day, but they're very disregarded. You may be the person that washes everyone's car and picks up quick money that way. for a second job, or make it a full-time career, whatever it may be. Sort of participating gig economy, and what that means is platforms connecting individuals with short-term tasks or driving opportunities that can offer immediate earning potential on just certain tasks that they need. So a lot of people put on platforms, they need, a job done. So, or help, or could be anything, right? It could be driver sharing, it could be food delivery, that sort of stuff. Just depends on what your skill forte is. Often the quick one to get money fast is to sell unused items. So declutter your home. If you find that you've got a lot of stuff lying around, it is worth, what they say, it's cliche, one person's trash is another person's treasure. You could sell that, get some money recouped for that. Could be clothes, furniture, electronics, books, collectibles, whatever. You just got to take a look around. If you don't use it and you can sell it and make money, why not? Online services and micro tasks that I wrote down, it's sort of like a pay per task. It normally is a low sort of return, but it sort of dedicate your time to online surveys and stuff like that. There's a bit of that going around at the moment. Doesn't pay astronomical, but it is another additional source of income. Websites often do this, right? You complete their surveys, or you test the apps, performing data entry tasks, stuff like that. They often pay. The other one is particularly interesting that I wrote down was tutoring. If you have a skill or a profession, or you've gone to uni and you have you can tutor someone or kids, or that's often quite a rewarding one. And there's a high demand for tutoring these days. It could be mathematics, whatever it may be, a language or anything like that. The other thing to sort of consider when sort of making fast money or trying to earn money fast is time investment. Even fast money making ventures require your time and effort, right? So that also means that you're going to require a lot of your own intrinsic time and effort to do this. Just be careful and mindful of your health, but if you think you've got the energy and capacity, do it. The resources you may need, a car, stuff like that. Reliability, just make sure that the tasks or the jobs that you're doing on the side, they're reliable. And sometimes some of these jobs can, like I said, end up as a business. They're scalable, right? So just have a look at that. I mean, if it's just money on return that you want to have a look at, and you think, well, a business is sort of not where I'm going with this short-term goal to make money fast, that could be anything. But what I think here the most important thing is to do is, all of you sort of really know these basic fundamentals and can sort of brainstorm a lot of these, what we've just been talking about. But what I do always propose is to make sure that when you do make the money and you've been working hard or harder, and it's quite a big demand, is to invest that money short term or long term wisely. Invest it wisely. So once you've generated the income, the key is always to invest it wisely. Could be long-term growth, short-term, whatever that may be. So what you really want to do, so once you've sort of got your plan of attack and you know where you're going to start making the money, you want to define your financial goals. So why? What are you going to invest in? So once you've got this money and you keep recouping more and more money on top of your regular income or business, what are you going to do? How are you going to invest it? So sort of, those of you who know me, once again, I'm heavy on financial goals, on the micro goals, the smaller goals, and where do they lead to the macro goals, being the larger goals, as a financial independence. What are your goals? Knowing your goals will help determine your investment timeline and risk tolerance if you work it backwards, right? And also, when I touched on risk tolerance, simply because understand how comfortable you are with the possibility of losing some of your investment in exchange for potentially higher returns, right? So your age, financial situation, investment timeline, it always influences your risk tolerance. So the older you are, you want to make money faster. Obviously, it's a higher risk tolerance you need. Younger investors with a longer time horizon may be a lot more comfortable with lower risk returns or stuff like that. Yeah, so it's all relative. So just be aware of your risk tolerance. Don't create a hell of a lot of anxiety for yourself just to sort of make money fast with being detrimental to your health. And also build an emergency fund. So before investing, ensure that you sort of have readily accessible emergency funds to cover you for the next 3 to 6 months. So what I mean is, the moment you save some, just don't put it away quickly and invest it and lock it away. Always make sure that you've got at least, I always say 6 months at least, of living expenses. So your living expenses, if it costs you $1,000 a week type of thing to live, then you want to make sure that in a month or $4,000, you'd have about 24 grand, six months worth of recouping, or emergency funds if something happens. It could be an emergency you need around the home or the car or whatever it might be, right? And it sort of prevents you from having to sell your investments prematurely if something unexpected arises. So always good to be aware of. Now, also understand different investment types. So sort of familiarize yourself with the various investment options, but also understand that all of them sort of have risks and they've all got different potential returns, right? So we'll start off probably with stocks or equities. They represent ownership of a company, so you're buying into a company. So you probably want to learn a little bit about the company that you're investing in or buying shares in. And the simple thing is, quickly, is they offer the potential for really high growth. But then, that being said, high growth, high volatility. You could sort of do that with stocks. You'd really have to do your homework with that. I would suggest always with these sort of investments, learn about them, go through the whole thing. It could be individual stocks or through stock market index funds, or you could do exchange traded funds, what they call ETFs and stuff, or for a bit of diversification. Doesn't mean if you invest in shares, you can't invest in ETFs like exchange traded funds, stuff like that, right? So get your head around that. Bonds is also another one. It hasn't really been on a high demand, depending on who you speak to, of course. It's sort of like a fixed income. Bonds, they represent loans you make to a government or corporation. They're less risky, but with less return quite often. And but then saying that, you can invest in individual bonds or bond funds, ETFs and stuff like that. So that's also another one. Real estate's always the one that kicks off on a lot of, especially in Australia. Investing in property, it gives you rental income. It's also got the potential appreciation in value when it comes to your property. So choose wisely, speak to, as I always say, keep your team in check with that, and speak and learn and find out with all the experts in the industry. You sort of, it can require significant capital as opposed to, talking about shares, investing in shares. So be mindful of that. But then, that being said, there's also real estate investment trusts, right? They allow you to invest in real estate without direct ownership. So there's multiples of those also available. So if those of you who are really interested in real estate as opposed to shares or bonds and stuff like that, or managed funds and stuff, it's always good to have a look at this. And at an age of, you might have heard it. It could also involve what they call factoring. You're buying sort of shares of a property or a syndicate, that sort of thing, right? Managed funds or mutual funds, that's a pool of money for many investors that they invest in a sort of diverse portfolio of stocks, bonds and other assets. But they're normally managed by a professional fund manager. So not a bad way. Fund managers always, they sort of direct the where the money is invested type of thing. So basically, a group of people put a amount of money into a pool and that gets invested, right? So exchange traded funds, what they normally call ETFs, similar to that of the sort of mutual funds, as in what I just mentioned, but trade on stock exchange, like stocks that are offering more flexibility, right? So many of these ETFs, they sort of track specific market indexes, like there could be S&P sort of 500, that sort of thing, or sectors. It just provides a bit of diversification, right? So exchange traded funds, sometimes a lot of people say, look, it's all too hard, I don't know what I'm doing here, so I'll just stick to property. nothing wrong with that. Just be aware that this really, I'm just going through my list that I've written down simply because it gives you where you can. I mean, there's so many ways, and those of you who sort of pick up anything from this episode sort of go, well, I might have a look at this or that. So, and I always say diverse your funds, right? So because you learn about them, as in stocks or ETFs or property, as they say, don't put all your eggs in one basket, simply because diversifying across different asset classes or sectors or geographies can often reduce the risk, right? So if you put 10 grand in stocks, 10 grand in a property factoring or indexing and stuff like that, you diversify it around, you often find that there's less risk. It just means that some sectors grow faster or slower than others, or provide more profit than others, but at least you're diversifying. For the long term, I'd always make sure that, investing, don't think that you're going to invest today and in a week you pull your money out and get a return. It's a long-term thing, right? So investing is pretty much like a marathon. It's not a sprint, as they say, and you avoid trying to time the market or chase it or get rich quick. I'd just invest and set your goals, learn about these investments and stuff like that and their risks and everything like that. Speak to a team of credible experts, and they'll give you the lowdown on it. Consistent long-term investment, it sort of allows your investments to grow through the power of compounding, and compounding is probably what investing's all about, right? So you should also want to consider low-cost investment options. Fees can eat into your investment returns over time, right? So don't always think that fees are sort of there as you want to manage that. They're the liabilities, or they're the costs involved with investing. So always make sure your fees are down. So always, if it's a lower fee and you're thinking, look, that's fine. Obviously with real estate, your fees are your stamp duty, it's massive. There's mortgage registration costs, transfer costs, all that sort of thing. But if you're just buying simple stocks for, $1 grand or $500 or something like that, obviously you've got the brokerage involved there. So work out your costs. And you can also automate your investments, right? So especially when it comes to sort of you setting up a regular sort of automatic transfer from your bank account to your savings account to your investment account, it sort of keeps a consistency. So if you chose just $500 every month, or it could be whatever, $5 grand a month, whatever, and you could sort of do it that way and automate the investing so it's consistent. And whilst you are doing that, just don't set and forget. I'm a strong believer in sort of rebalancing your portfolio every now and again. So over time, your initial asset allocation of, let's say, 60% of stocks or 40% of bonds, it sort of may drift due to different investment performances. So rebalancing involves selling some assets and buying others to bring the portfolio back to your target allocation. So if you're always wanting a 8% return and you're finding that 60% of stocks isn't doing it for you with the 40% bonds, you might want to buy more bonds or less bonds and buy more stocks, that sort of stuff, and try creep it up towards that. Always, it sort of helps manage risk and ensure that you sort of stay in line with your goals of, in this example, 8%, right? Or whatever you determine. And learn and review, just stay informed with the market conditions. Always make sure, especially if you're in ETFs, shares, that sort of thing, or you're investing globally, world news, stuff like that, you really want to be on, just see how your investments are performing, and review your portfolio, right? So that sort of stuff, simple, basic stuff. And last sort of thing I really want to do was the risk management when it comes to investing. So diversification was number one. Asset allocation was going to be number two. So diversification I spoke about before. I scribbled down asset allocation, simply choosing the right mix of classes based on your risk tolerance. So everyone's different, like I was talking about. Writing it out, a short-term market fluctuation. So just because there's an up or down turn in the market doesn't mean your investment's going bad. It's a long-term sort of thing. Dollar cost averaging was something that I wanted to also touch on, simply because it sort of means that what dollar cost averaging is, it's investing a fixed amount of money at regular intervals, right? So just regular intervals, like I was saying before, $400 a month, or could be $4,000 a month, depending, and it doesn't matter what the asset price is doing. A lot of people do this with shares. ETFs. Bitcoin is also another one where they do dollar cost averaging. So internet's full of these platforms that you can jump on, a reputable brokerage that can look after you there. And it can reduce the risk of buying high with dollar cost averaging. So you literally just, even $100. I've known clients to buy Bitcoin at $100 a week, and they're just literally dollar cost averaging. Now Bitcoin goes up, it goes down. I don't know if any of you that follow it, but it does go sometimes quite erratic in the cryptocurrency world. And you could buy it high or you could buy it low. It doesn't really matter. Investors just believe it's a long-term game, and they take out $100 a week and set and forget. And knowing that, you've also got to understand the volatility. So recognizing that the market fluctuates, right? So, and that's normal. So avoiding emotional decision-based sort of investments is what you really want to do, or short-term type of thing. So look, I hope this making money in a short amount of time episode was something that sort of helped. Realistically, what it comes down to, in effect, in conclusion, is if you are making additional money on top of your regular income, it could be a job or your business, or you're enhancing your business or anything like that, what you do with your money, like I said, it's a two-pronged approach, making money and investing it. Like I said, going back to an example, you may take on walking the neighbour's dogs and earn an additional $50 a night from it. What do you do with that 50? Do you go and blow it all away, or do you reinvest that into some stocks that set it up as dollar cost averaging? So if you're making $50, an additional $200 a week in extra just from walking the dog, you invest that into the shares, and some shares pay dividends, regular dividends, and it's giving you money back immediately. So there's so many different ways of doing it. I'm happy to talk about this sort of thing one-on-one if it helps. But making money fast, it does require a lot of effort. The faster you want to make money, the more energy you got to put in, just like a motor vehicle. That's just the way it is. But make sure that you invest your money what you're making, and then that way your investment will start giving back to you to sort of help you slow down with that money making process, and have the investment starting to work for you rather than you working for the investments, right? So hope you enjoyed it, guys. Stay safe, take care, and see you on the next episode.